All right, welcome to the weekend video. This is Enda here from bullwaves.org, and if you are interested in nightly Elliott wave analysis, you like what I do, check out bullwaves.org and see if you're interested in joining. I'm not into the big sell today. I don't have it in me. Been an interesting week as always. So let's get into the charts and make of it what you will. But I'm going to tell you what I make of it. So let's get in. Can we do this seamlessly? No, we can't. But hey, here we are. I'm going to start with the $FX first, and then we'll move. You know the routine by now. If you've been around for any length of time, you know the routine. Okay, so euro dollar. I have been looking for this reversal pattern. Go to the weekly chart here. Up into a big C wave rally to complete wave B. So on the 4-hour chart, I've been looking for this final decline in wave B to complete. We did get a nice, reasonably impulsive so far move off the recent low. So the recent low stands at 98.63 or thereabouts, give or take a pip or two. And the rally off that low has been, very much camp of impulsive. I cannot tell at this point in time whether it's the reversal pattern that I've been looking for, but so far that's what I'm working with. We'll go to the hourly count and I'll show you. So here, the actual degree that I'm labeling at here is probably inconsequential at this moment in time. We could shift it up a degree. It might even be more fitting. But anyway, I can see a possible 5-wave pattern here. So we've got a wave 1 and 2, third wave acceleration, fourth wave pullback, and then we've got a 1, 2, 3, 4, and 5 into the top. So far, it's really hard to make much sense of what happened off that wave 1 top, because I can count that 5 waves down as well. So I'm not sure at all. I'm not, let's say, overly confident at this point in time until we get a rally phase come in, a third wave rally, whatever degree it is, a third wave that comes out above the previous fourth wave high, so that'd be 103.67. We break 103.67, then I think, it builds the case, builds a much firmer case in favor of the bullish wave count. Let me just check, am I still recording? I am still recording. So let's go. My computer's running pretty slow, so I'm just checking to see if it's actually if everything's kosher for this. Right? Okay. For this wave count to be validated, I think we need an acceleration next week. We need to rule out the possibility that this will reverse lower again. So, Monday is going to be crucial in that scenario. So we need to break above 101.98, and that's the idea here. Okay. Initially 101.98, and then I'd be much happier if we got above 103.67. That's the previous fourth wave high. Okay, let's get on with the show. Let's go to pound dollar. Again, watching for that low, final low into wave 1 here. So wave 5 of 1 is closing out now, and I'll get into, and maybe we get a reversal pattern next week in cable. It's not as, this wave count doesn't count on that, let's say. I'm overusing that word, but it doesn't depend on a reversal happening next week. But I think we're getting quite close. On the hourly count here, you can see we've got a wave 3 low, expanded flat wave 4, and then we've got the makings of a 5-wave decline here. So I think, in all honesty, I think we'll probably continue lower for most of next week, if I'm correct here. Excuse me. So we should continue lower, complete this 5th wave in green, which will complete the 5th wave in red, which will complete the wave 1 in blue. So we're at the end of a pretty high, high degree first wave decline. So we should see a second wave, corrective rally pretty soon. Initial targets, I would be probably looking towards, the 130 area, and I think I've mentioned that a good few times. On the hourly count, I want to see 5 waves down complete. I don't think this internal third wave is done just yet. We might have a fourth wave correction today and maybe a fifth wave decline on Monday. I don't know how this is going to play out. We did break to a new low, so today's trade was, let's say, confirmative in the, or let's say a vote in favor of this continuing decline. So let's see if we get that throughout next week, and if we can complete this pattern next week, all the best, all the better. Okay, let's move on. Dollar yen, the market that will not top. So, what do you do with a market that doesn't top? Well, wait for it to turn your way, maybe. I have been expecting a decline, commensurate with the rally in the Atlantic pairs. I've been looking for a decline to begin in, this dollar yen, the Pacific pair, 5 waves down into wave C of 4. It's been holding out on me so far. We may be able to discern maybe a 5-wave decline into wave 1. That's a 3-wave rally anyway into wave 2. Didn't quite break to a new high, so we have kind of come off we've failed, let's say, below 145 again, and a possible 1-2 underway or else complete. I don't know what's the best way of viewing that right now, because you could easily say that we could easily say that the action today was less than impulsive, let's say, to the downside. So we might be building a lower degree second wave here, and then if this is the case, then we should rush lower on Monday and Tuesday. So next week I will be looking for a third wave decline, just like on the opposite side of the world. I'll be looking for a third wave rally. So you can discern for yourself what the dollar index should do on the back of those pairs. Usually just look at the euro dollar. That's the most heavily weighted index in or the euro is the most heavily weighted index in the Dixie anyway. So just look at euro dollar and then make your assumptions from there. Okay, let's see next week if we accelerate into a third wave down. I'm not totally sold on this pattern yet, but it hasn't been ruled out yet, so that's the main issue here. I would, I prefer it to just be ruled out so I could work on something else. But until that happens, I'm stuck within this kind of accelerating pattern to the downside, and we'll see whether that holds up next week. Okay, move on. The Dow. Last week I titled, what was it? Last week's update. I think I said something like we should be expecting a Black Monday type event coming soon. We didn't get a Black Monday. We got a Black Tuesday. Well, it wasn't quite a Black Tuesday either. It was quite a nice, let's say, impulsive move to the downside, and it has not been answered at all this week, which should be really, really, really ringing bells for all the bulls in the world. We're approaching. Let's say, go to the daily count there. We are approaching the lows again from we've had 6 months of decline or more. Sorry. 8 months of decline. We're approaching the lows again of this whole decline. So I would like to maybe suggest that it's worth considering that something much bigger is going on here. And we seem to be answering. We had all the way up from March, the April 2020 lows, March 2020 lows. We've had the series of left shoulders building and rally left shoulder, rally left shoulder, rally left shoulder. And now what we seem to be happening is, the complete opposite of that. We've got, impulsive decline, left or right shoulder, impulsive decline, right shoulder, impulsive decline, right shoulder. And we've had a mother of a right shoulder complete in August. Am I in August yet? So yeah, the middle of August there. And now we're getting impulsive declines again. So the even the casual observer would note that these rallies are failing. Just like that we had the incessant support all the way up, we seem to be having incessant resistance on the way down. So here we're looking at kind of quintessential head and shoulders pattern, and maybe complete at that neckline. I would suggest that the highs in August actually did come in more or less within the support area of this previous left-hand shoulder. So, you know, look out below. Here we are looking at the series of 1-2 patterns, and if this is correct, then the declines that have happened lately are also a series of 1-2 patterns. So again, this corrective lower high, second wave, and now this week an impulsive move lower again. And like I said, we're approaching the pattern lows, that were created off the rally, or sorry, off the decline since February there. So that let's say most extreme low that we've reached so far is 29, just below 29,700, and here we are. We're about 1,000 points above that, well, give or take, 900 points above that. I would caution. How do I word this without putting myself in a bind? I think if we do break to new lows, that may well set off a barrage of technical selling, just because it was the extreme low before we had that that rally over the summertime. That was the extreme low we reached back in early June. So that obviously is built into a lot of programs that's going on, and if that low breaks, then I think we could be switching from from a hold, an outlook for holding, to an outlook for just dump at any cost or at any price. Let's say I'm not I don't have that on a document anywhere. I don't have that that's not written in gold or written in stone anywhere. It's just, it seems to be a logical point that might kind of flip the action here to go complete all out selling into a third wave, and it would be the right time of year to do it as well, really, wouldn't it? Here we are in the hourly count. I've been looking lower this week. I think I haven't got confirmation. I've been looking for a third wave, but I haven't got a confirmation of a third line yet. We're breaking low again this evening. Obviously the trade isn't finished, but we do have a possibility of a 1-2 pattern to begin a third wave in blue. This 1-2 pattern is, I would suggest, quite worrying, because it could well set us up for the continuation lower that will break below that 29,700, 29 whatever it is, 29,640 low. All right, it's a season of concern, I would say. So next week, if I'm right, then this selling continues. I would watch, on the short term, I'd watch that wave 2 high there, so 31,290. If we break 31,290 again, then maybe we're working on a larger second wave correction. I was writing throughout the week that I didn't really want to see a large second wave correction, but I can't dictate what the market's going to do. Today's action is in favor of a third wave decline now beginning, so watch out from probably Tuesday, if anything. Again, I reiterate what I said last week, that someday in the not too distant future there will be that kind of watershed moment, or waterfall decline into a third wave will begin, and there will be no stopping it once that momentum does shift. Okay, so let's move on. So I would be just quite cautious if I were you. Here's gold. I am, while not entirely certain, I think we've hit that area that I was pinpointing for quite a while. 1650. We hit, well, almost hit 1650, I think, today, and we have bounced so far. I'm not quite sure whether that will be a sustainable bounce or whether we get another move lower. But for the let's say tentatively that we may have bottomed here. It would be quite interesting to see a bottom in gold right when the stock market seems to be ready to capitulate. If that is happening, then maybe the rush into gold will start. I don't know. We haven't quite filled out the channel, which is one kind of slightly worrying attribute of the action of late. While we may have a pattern complete in, well, one particular type of pattern complete in wave 5 here, we didn't fill out this channel, so there's still an opportunity to fall below 1600. Whether the market takes it or not, I don't know. So far, the general kind of financial markets seem to be willing to go along with whatever happens in the stock market. So if the stock market wants to rally, the general, it doesn't matter across the board, they most assets seem to want to rally with it. Again, I think that's probably just a social mood type of thing that's happening there. Let's get into the hourly count here, and I'll show you what I think. Anyway, for the moment, I've been working with this ending diagonal pattern. It's a feasible pattern, but I'm not entirely sold on it either. Excuse me, I'm kind of a bit choked up tonight for some reason. It's an ending diagonal pattern. The main reason was we got this clear 3-wave move in what could be a third wave, and then we got a retracement back above the wave one low. Sorry, so that's two quintessential features of an ending diagonal. So we could say that the whole thing is an ending diagonal, and we are now at least almost complete, if not complete, at today's session lows. So if it's an ending diagonal, then we may have completed at 1653. If not, we could fall back, let's say on the 4-hour count, back towards the lower end of this trend channel here, which could see a break of 1600. Maybe even towards 1660 or 1560 or 1550 to complete that. Let's see. Next week should tell us a lot, because if we are bottoming here, then we should see a break above the previous fourth wave or second wave correction to completely end that pattern here. So I would initially look at 1735 for a confirmation, let's say a bullish move above 1735 in the first wave. If we get that, then we'd look for a higher low, and then we would be, I think, away to the races again for gold. Okay, so we're close. Not quite sure if we've got the cigar just yet, but I think we're close. Let's move on. Crude oil. Crude oil, I did swap. I did change pattern this week. The main reason was, well, I haven't even confirmed this pattern yet, but I think the action kind of suits a shift in the outlook, at least in the short term. So I'm looking at a wave one down into the early July lows, and then an expanded flat correction, wave two, probably still ongoing, maybe a C wave rally now beginning, and I would look above 101 to complete that C wave rally. There is an alternate here, obviously. Maybe we completed that second wave back in mid-August or end of August, and now we're working on a lower degree impulsive decline. I can't confirm nor deny that, but I think it might be worth putting in as an alternate pattern right now. So while I doodle here, chat amongst yourselves. Okay, so we could be talking about a running flat wave 2, and then another impulsive 1-2 pattern to begin a third wave decline, and that would be again a third of a third decline. So let's get into hourly count here. Here is the main wave count for wave 2 in blue. We have wave A to an interim high back in the beginning of August, then 3 waves down into a wave B low. Even though we made a new low, it's still a B wave low, and now a possible 1-2 pattern beginning a C wave. So this should be a 5-wave rally up into wave C of 2. And again, I'm looking at that 101 level to complete this pattern. Now, if we do not break that internal B wave high, let's say we stay below $97, even below $95. If we just track 3 waves higher, that pushes this pattern towards an impulsive bearish impulse wave to the downside, and we could be beginning wave 3 before I even suspect it. So I'll actually put that in here right now as an alternate count. So we could be talking about wave 1 there, and maybe wave 2 up here, and this would be the previous higher degree wave 2 here. So we could be talking about wave 1. Again, sorry for doing this right now, but it's just the way it goes sometimes. Wave 1 there. Three wave rally again. Say that quick. 3-wave rally again to a lower high in wave 2 in green, and then we'd fall again into wave 3 of 3. Again, in the line of a kind of a waterfall pattern down into a third wave. So a third of a third degree decline would be the major acceleration wave down. We will see how that goes next week. Again, should be enough to confirm or deny that pattern. If we break that interim high at $97, then I think we are going to do that expanded fact correction above 101 in wave 2. So we'll see how that goes. Right. Crude oil. Let's get into the S&P. Here's the 4-hour count in S&P. A little bit simpler. Moving into that third of a third decline, and today's decline maybe wave 1 of 3 of 3. So, or sorry, yeah, wave 3 of 3. It looks like we have wave 1 and 2 done of that third wave decline. We have wave 1 and 2 done this week, and we've moved lower again today to begin a third of a third of a third. Now, if this count is correct, then we are looking at a pretty open door to the downside next week. Again, like I said in the Dow, a waterfall moment where everybody basically just gives up and starts selling. I don't know if there is something, maybe there's initial bankruptcy of some company that comes along, or a major company. Is there any results next week? There might be. No, it's too early, is it? Someone will tell me in the comments there. Maybe there's a major company that will come along that will declare bankruptcy. Maybe there's a company that will just throw up their hands and say, listen, we're in a recession, get on with it. Maybe is there a Fed decision next week? I'm not sure. I don't really keep an eye on that kind of stuff. Maybe I should, but I don't. I stick to patterns and patterns only. Patterns and momentum and sentiment. That's kind of basically where I reside. It's kind of the outskirts of the. I reside in the internals of the market. That's kind of where I go. Right. If we're in a third of a third decline next week, then we should see a further acceleration lower. And if that's the case, then maybe we should watch out for Monday, Tuesday, early week. The possibility of a big step lower has happened last week. Again, on the longer term, it's 4-hour chart here. If we break the early June highs, the early June lows at wave 1 there, so 3600, if we break that again, I think the market will pretty much switch to sell mode across the board. We have a couple of targets for a third wave decline. You want the targets? Come and join the website. So I'll be watching this pretty closely on Monday, and Monday's update should be quite interesting, I think. So we have a couple hours left tonight before the trade closes out, but we're after lunchtime now in New York, so it'll be probably slowing down. I don't think we'll see any major selling into the close. That might have to wait until Tuesday, maybe Monday or Tuesday. We'll see how it goes. So I think it's probably high alert time next week again for a possible third of a third acceleration lower. Okay, here's silver. Silver, we got pattern change this week. It doesn't take us out of the let's say out of the weeds here at all. I think this pattern is quite cemented at the moment, and I think it will result in further declines. So I think we've got a third wave decline, either complete somewhere here, maybe at the most recent low, but I'd probably favor the July lows for a third wave low. That'd be wave 3 of C of 2, so wave C down in 2. we go out even further? Will we go out? Yeah, okay. So we've got wave C down here in wave 2. We're tracking a 5-wave pattern here within wave C of 2. So if you go into the 4-hour count, you can see that 1, 2, 3. At the moment, I'm looking at either a running flat or an expanded flat correction in wave 4. 2085 is the high to watch on that one. If we get a failure below 2085, then I think we're going to probably $16 to complete the whole correction in wave 2. So I would watch out for this 4th and 5th wave possibility here. Obviously, there's an alternate count here that could call the recent low the final low, and now we're building a 5-wave pattern to the upside. Just kind of hold out on that next week and allow for more downside than upside for the moment, I think, until we get kind of to a confirmation point. Maybe we do get a bullish confirmation next week. I don't know. But I would allow caution here as well, because silver is more, it's definitely more susceptible to kind of wild, knee-jerk reactions, and it may well get hit with one of those next week. Okay, Bitcoin, again, looking for well, no, I'm not looking for the lows yet in Bitcoin. I think we probably have further to go, and maybe this week's action is calling a halt to that rally as well. So I think we've got wave 4. We're moving down into wave 5. So this would be wave 1 and 2 of 5. So we've got wave 1 and 2, and then we get a third wave decline into wave 5. And this third wave decline could really bring us down into single figure thousands. Well, we would 3 digits again, or sorry, 4 digits again, before we hit lows in wave C. Now we're getting to the hourly count here. This is the pattern I've been tracking for the last while, for the last week or two. Possible ABC up in wave 2, but I'm just drawing attention to the fact that the wave A rally has already hit the 62% retracement of wave 1 down. So, and this week's decline right in line with the declines in the stock market. So if we do move into a third decline in the stock market, I think this ultimate of speculative markets will be taken lower with it. I'm not quite sounding the death knell of Bitcoin just yet, although there is many and numerous government, including the Chinese, have already banned it. Don't rule out the much of the Middle East or let's say the Asian countries banning Bitcoin because of the run that seems to be happening into the dollar across the board. And if and when we do actually move into that, acknowledging the fact that we are in recession right now in the West. Once we do actually acknowledge it, nobody seems to want to acknowledge it just yet, but once we do actually acknowledge it, I daren't say that we might even get a further run into the dollar from Asia. It might be an Asian crisis again on the boards here, and if that happens, then you can rule out Bitcoin as a tradable market over there, because they're gonna clamp down big time on getting your money out of the countries. They won't allow anyone to get their money out of the country. So anywhere in Asia there, you could probably say that Bitcoin is probably doomed if it isn't already. Okay, so if we are going to trace out 3 waves up next week is crucial, because we cannot break that new low, I'd say. So 18,500 again. We break 18,500, we're into third wave down, and that could be ugly for Bitcoin. Let's move on to NASDAQ. Again, that 1-2 rally that I was following pretty much got confirmed this week, and we're moving back down to the lows of that summer rally is disappeared pretty quickly once people came back to reality. 3 waves up in wave 2 and a 1-2, possibly moving into third wave decline now. So here is kind of major selling a gap lower into this evening's market. I wonder, was there some sort of results from a tech company? I'm not sure. We have 3 waves up, expanded flat, wave 2, and now a possible 1-2 third of a third wave decline coming in in the tech stocks. Text was leading the way across the board. Here we are, the Nasdaq Weekly. Look what we've got. If you thought that we had finished the crash, in tech, and tech had hit a low, don't rule out the continuation here, because I think this is a long-term decline, and we're going to wipe out all this rally that came over the last 8 or 10 years, and we're going back to low thousands, maybe even below 1,000. This whole parabola will unwind. Okay, next week, go back to the hourly count. Let's see if we get the third of a third decline. Okay, that pretty much does it, I think. As always, I would urge you, before Third World War breaks out, as is happening right now, is starting across the board. The banners have been raised, as I said last week's video. Biblical prophecy, biblical prophetic narrative is unfolding right before your eyes, even though you may not realize it. It is. The bear has risen. That beast called the bear has risen, and it's taking chunks out of his neighbors, and he's quite angry this week. So he is. So expect that to get worse. Expect China to fall in behind it, as we see, the communist nations come back to their own. So that bear is rising, and the banners are now flying, yellow and blue on one side and red on the other, and the armies are gathering. So I would say, if you have an inkling at all towards your eternal abode, I would say, look to the one who paid for you, the price for you. That is the Messiah, the Jewish Messiah, Yeshua, Jesus the Messiah. I'm not asking you to commit to religion. Jesus came to put an end to religion and open up relationship with the Father once again. And the only way that you have a relationship with the Father is through the Messiah that paid for your sins. Because we are sinful man, and we cannot clothe ourselves in our own righteousness, because we have none. As Isaiah said, we only clothe ourselves in our filthy rags. So you take on the righteousness of the Messiah. You clothe yourself in the righteousness of the Messiah by believing in him and what he did for you, and by paying for your sin. And then you are truly free. He who has the Messiah is free indeed, and free for eternity. So he offers you full payment for your sin.